Hello everybody and welcome to the latest in our Let's Talk seminars. Today we're focusing on bridging finance and I'm delighted to be joined by Richard Deacon, who's the Sales Director for Masthaven Bank. Richard's worked in finance for over 20 years, 15 of which has been in the specialist bridging finance sector. As one of Masthaven's founder members, Richard joined the bank in 2008 and now manages its short-term lending, sales and distribution. Richard was National Account Manager at Personal Touch, and he also won Personality of the Year for Bridging and Commercial Finance Awards in 2017. So good morning, Richard.
Hi, Dave. How you doing? Thanks for having me on.
Not a problem. It's always a pleasure to have an expert with us, certainly in the areas of bridging finance. And what we want to try and do today is to give our property investors and developers a quick insight in a very short bite-sized period of time into some of the key areas of bridging. So one of the things that I'm sure people will be keen to know, Richard, bridging finance is used for multiple purposes. Are you able to cover off the main reasons why people do use bridging finance for us?
Sure. There's a whole plethora of reasons that people use bridging finance, Dave, as you know yourself with the deals that you've given us over the years. One of the things that I will say is that people generally never want bridging finance. They need it, and they need it for a number of reasons. Primarily, it's speed. If you're a buy-to-let investor, for example, or a property portfolio landlord, and you get a purchase that you can't say no to, a good area, it's got a good yield, you can add value to it, and you need to get that property now before it goes on the open market, for example, well, you need a bridging loan quickly, unless you've got deep pockets, of course, to transact that property and make the purchase. You're buying yourself time. You know, in an ideal world, yes, you'd get a buy-to-let mortgage on it. In an ideal world, yes, you'd raise money from other areas for that. But what you're doing is buying yourself time to purchase the property, to maybe fit it out, to do the tart and the turn, the flip, and then get the refinance on the other end. So bridging finance primarily is used for sort of purchases of either residential or buy-to-let property. We do an awful lot of chain break situations, downsize situations, and upsize as well. So, for example, we would do on a downsize or a chain break something with regards to a second charge bridge on their current residence and a first charge bridge on the purchase, because someone's pulled out of the purchase of their property. So what you're doing, you're bridging the gap between someone pulling out of buying their main residence and then reselling it again within the next 3, 6, 9 months. A lot of properties are used for capital raising as well. So if someone's got a business opportunity, similar to the one I alluded to earlier with regards to the buy-to-let purchase, but it could be anything. It could be to buy stock, it could be to buy premises, it could be for investment into some company where they know what the yield is going to be on the coming out of that property. And again, in an ideal world, they'd have savings in the bank. In an ideal world, they would remortgage their property. In an ideal world, they'd sell the buy-to-let property to raise the finance, but they haven't done. The opportunity is here and now, and that's where the bridging finance need comes out as opposed to the want.
That's good. I mean, it's a supplemental question. I think in the last 12 months, an awful lot of people have, really tested the bridging funders. They've really tested them on what they can use and for what purpose. And we've started to see bridging used for things like you mentioned, like refurbishment, heavy refurbishment and development. Is that something that as a supplemental, you can see the bridging finance companies and funders looking to use more?
Yeah, absolutely. I mean, we've just launched our new product range, and one of the products on there is a heavy refurb bridge and a light refurb bridge. So refurbishment of property is, encompasses everything. It encompasses someone like yourself or I, Dave, looking to buy a new house to live in with your family, and you think, do you know what? I don't like the wallpaper. I don't like the bathroom. I don't like the kitchen. I'm going to do that. So that's what we would call a light refurbishment, as most lenders would. Then you move on to the the sort of heavier end of the refurbishment side of things. So that would be something like turning a large Victorian townhouse into 2 or 3 flats. It might be buying an old pub and converting that into 2 semi-detached properties. It could be a barn conversion, that sort of thing. And then you move on to what we call full-on development, which is the ground up stuff. So, people call it bridging finance, people call it development finance. Arguably it's sort of a quasi product where someone is looking to purchase a plot of land or a parcel of land, or they may own the land already, or in some circumstances, and what's becoming very popular is that they're sort of splitting their garden. So they're splitting the title of the property that they're on at the moment and building at the end of the garden or the side of the garden where they are at the moment. I think we had an inquiry recently very similar to that, you and I. So that's the sort of thing where development finance is, and we would provide finance to build that property, with the exit route being a refinance onto a term mortgage, or indeed selling it on as well. But refurbishment is a huge area. I think the latest stats that I read, I think they were via the ASTL, said that something like 25% of all bridging finance inquiries are either a refurbishment base, whether that be light or heavy refurbishment. And as I said, there's different pricings out there. There's different sort of loan to value bandings and bandwidths and stuff. But to turn what a mortgage company, so again, it's need versus want. I want to buy that property with a mortgage, but the mortgage company deems that property uninhabitable, or you can't get top market rent for it. So the mortgage company would be unwilling to lend against that property in its current condition. So that's where the bridge is needed to purchase. You can then refurb the property and, refinance or sell on the other end.
Superb, thanks for that. Now, obviously, Richard, over the last 12 months or so, lending across all banks, funders and sectors has changed so dramatically. Can you try and give us an insight into how funders, in particularly Masthaven, have adapted to these very, very different circumstances?
Yeah, it's been tough. It has been very tough. We've had conversations over the last year about how strange it is and how weird and wonderful the market is at the moment. First off, I think it needs to be said that Masthaven throughout this last 12 months, never furloughed a single member of staff, and we've not let a single member of staff go. We've always been there lending. All we did was cut our loan to values. We didn't change pricing. We haven't changed pricing one jot. We changed our loan to values down by 5 basis points because that was the sensible thing to do at the time. A couple of our big competitors stopped lending for the best part of 6 months. So whilst we were actually really busy, we were cognizant of the fact that we were busy because some of our main competitors had pulled out of the market. They literally had stopped lending or virtually stopped lending for quite a long period of time. So we got very busy. So what we had to do was look at how we work, and given that obviously we were all remote, and we were a bank as well of 200 odd staff all suddenly working from home, it was a really difficult time, as it obviously was for all lenders, but certainly larger lenders who were suddenly given this influx of business because of the state of the market. It was a very difficult time, but through all of it, we sort of said, we are going to carry on lending. That's our raison d'etre to be a bank, is to lend money. And we didn't stop. Yes, we pulled back on development lending, which by definition is a high risk lend. But we ensured that what we did do on the residential and the buy-to-let lending was, of sufficient quality. We were still doing the refurbs, we were still doing the purchases at under value and the lending to limited companies and stuff like that, because it made sense, that the deal made sense. It wasn't suddenly a bad deal. And I think, the successful lenders who come out of lockdown well are those that have, I don't know, ridden the storm's the wrong phrase, but just done things sensibly. We're all in the business of making money, of course, but then you pick and choose the time when it's sensible to lend money in the areas that you're lending against.
Good. I mean, one of the things as a sort of supplemental, Rich, we saw a number of lenders, yourselves included, actually change your slight operating models and using things like automated valuations and desktop valuations. Can you really, really quickly just talk people through how that works and why it's been successful for the banks?
Sure. So the AVM was huge for us. As I say, it was around about this time last year when the surveyors sort of said, we can't go out, we can't do our jobs, and we were like, Christ, we need to carry on lending. What are we going to do? So we looked at the AVM model, and we implemented it within, I think it was a matter of days, and we implemented it to no cost to the customer, and up to 60%, which I think is market leading. Loans up to £1 million, which again I think is market leading. And essentially, an AVM is how it was described to me. It's like a big algorithm. So if you imagine you've got a property in near where I live, sunny Southend-on-Sea in Essex, which is quite a populous area of the country, and there's lots of data to be had with regards to buying and selling. Let's just call it a 3-bed semi-detached house. There's good areas and not so good areas of Southend, just like there is in the rest of the country, and therefore you've got a really good spread of data from Zoopla, Land Registry, Rightmoves of this world that can say, right, in the last year, for example, or 5 years, there were X hundreds or X thousands of 3-bed semis sold in Southend of various sizes and qualities, but the bottom line is there's this big pot of 3-bed semis that have sold. These are the prices they've sold at, and this is the algorithmic confidence level that we can give our value on this property. So let's say a 3-bedroom semi-detached house in a road, three roads back from the seafront is going to be worth £400,000. They're pretty confident with the amount of statistics and evidence that they've got of purchases bought and sold in that area, that property is going to be worth £400,000. So they would put a confidence level number of, let's just say, 5.5 on it. So what Masthaven did was say, look, we're happy to accept AVMs, but then not all AVMs will have the relevant confidence behind it. So we take our confidence number anything over 5. So that I think it's from 1 to 8, I think. So anything under 5 is, well, here's the value, but do you know what? We haven't got that much evidence or statistical evidence to back that value up. So we said anything over 5 we're happy with, and as I say, it's free to the customer. And we surprised ourselves with the amount of AVMs that we've used over this last 12 months to basically make these property transactions happen.
Great, thanks, Richard. I mean, another question that I think a lot of people ask when they're going into these sort of scenarios is, what are the key benefits for clients and funders when you deal with a broker-led introduction for property funding, for bridging or development or refurbishment, when compared sometimes to directly? Can you talk to people about why you think where the brokers' roles have to play?
So, in all my time at Masthaven, it's been a few years. We wouldn't have got where we are today if it wasn't for the broker market. People like Balance of Business, people like yourself, Dave, who've been with us through thick and thin, and over the years we've had many phone calls about inquiries that we've got. That what you've got to think of is the consumer is the customer. So if you're going into a supermarket to buy your weekly shop, as a consumer, you don't really need any advice. You don't really need pointing in the right direction. Your products are there that you're going to buy. If you're a consumer and you're going to purchase some bricks and mortar, whether that be as a residential property for your family to live in, whether it be as an investment that you're going to put another family in, whether it be for a commercial property that you're going to run a business out of, or you're going to put a business into, or whether you're buying just effectively a piece of mud, a bit of land that you're going to build a house on. There's two things. A, it's probably out of your comfort zone unless you're a specialist. And B, there are an inordinate amount of lenders out there. And, I'm pretty clued up on Masthaven's criteria. And to be fair, I'm pretty clued up on sort of 10 of our main competitors' criteria, because that's my job to do so. But other than that, I wouldn't really know the ins and outs of a commercial mortgage or a commercial bridging loan or a development loan for units over 10 or anything like that. And the broker, where it's your job to do this sort of thing and to advise your clients accordingly, whether it be regulated or non-regulated, we wouldn't be where we are today. And do we accept sort of direct business? Yes, of course we do. I could probably count on the fingers of one hand the amount of direct inquiries we've had in the last 18 months, 2 years, even pre-COVID, because we don't say you can't use us direct, but we say, look, is there a broker that that you can use? Because we are just one lender and we'd be more than happy to help you out. But is there a better offering out there for you? Is this what you're after? So the role of the broker in all forms of finance, let alone bridging finance, is never to be underestimated.
Great, thanks, Richard. Now, as we move out of COVID-19, fingers crossed, hopefully, can you outline what your expectations are generally for the property market, from the knowledge you've got for 2021, particularly in relation to short-term funding?
Well, I mean, if I knew what the answer was going to be, Dave, I'd jump on it now and get all over it. I think, we do have obviously senior management meetings and company-wide meetings where we do talk about the future of Masthaven, as well as the property market and the bridging finance market as well. The quick answer is no one knows. You look at just the stamp duty holiday that was extended 2 or 3 weeks ago from the end of March. That was put in anyway, so that was a great bonus. Now it's sort of extended and been moved. You would think that is going to put maybe more people looking to buy property at that end of the market to take advantage of the stamp duty holiday, and then that always has a knock-on effect. So someone buying a £100,000 house, you would think, well, that doesn't really affect someone buying a £2 million house in London, but it does, because it's just the transaction quantity. So someone's looking to buy their first house for 100,000. Well, they're buying from someone who's bought that house, and then they're going to look to upsize. They're buying their next house, and like their children, so they're looking to do that. So it's all cyclical, and even though yes, a lot of people are in a chain, it's the web of chains across the property market that I think will, by definition, increase, because you think you've got people who've spent the best part of a year in lockdown, maybe doing DIY, maybe thinking about doing DIY, or maybe thinking, do you know what, I don't really like it here. I do want to move closer to my children's school, or my mum, or my dad, or my friends, or the coast, or wherever it may be. And I think by the fact that if you think that the population's been locked up and they're shackled for a year, I think the whole, whether it be June, August, April, May, whenever we are fully out of lockdown, which hopefully will be soon, I think it will just be shackles off, and people will be, certainly the buy-to-let investor market, property portfolio guys, they will be looking to increase their stock holdings. And I think as well the residential market will grow, purely because people will have the mindset of, let's move. I want to do this differently. I've learned from lockdown that this is what I want to do with my life, or our life, or start a new life, whatever it may be. So I think there will be a mini boom. That's my prediction. You heard it here first. And like, as I said, when people need to move quickly, bridging finance could be a key to help them.
It's an interesting point at the moment, because I think there's lots of predictions, as you say, Richard, it is people's opinions. For a lot of our clients, where we're based in the sunny southwest of England, over the years, funders could have been argued to be reticent about funding in Devon and Cornwall, Somerset, the more robust. More recently, the data that's coming out is it's a hotbed of property. Certainly in the last 3 to 6 months, in terms of sort of Zoopla and Rightmove and all the stats that are coming at us, Devon and Cornwall's a pretty attractive place to do business, as is Somerset, as is Avon. Do you think now that the Southwest, for our investors that are based in there, it's going to be a good time to do business?
Yeah, again, like I said earlier, Dave, I think it's a case of, and you said it yourself, anything statistically based that shows exponential growth in any area, wherever it may be, specifically the Southwest, the funders, banks, lenders would think, well, why wouldn't you want to lend in that area? Masthaven has never been geographically biased. You know, we've always lent in England, Wales, and Scotland for as long as I've been here. And yes, while there are some hot spots, and two that spring to mind, funnily enough, one historically, one was Aberdeen, and this was with the oil rigs going back, probably 10 years now. And the other one, funnily enough, was on my doorstep in Southend with the opening, when EasyJet came into Southend Airport, created huge amounts of jobs, infrastructure, and that coincided with the university in Southend as well. So, excuse me, they're just two areas that spring to mind that you can see exponential growth. And if you're saying to me that the stats from Zoopla, Rightmove, and the Land Registry show that the Southwest is an area of growth, as a lender, as an investor, why wouldn't you want to go down there? Anything that, if you can, it's like anything, if you can get in the bottom or quite low down and can see that the growth is going to go on an upwards curve, I think it's a tremendous place anyway. I've been down to see you many, many times. It's a beautiful part of the country. But I think you've got to think, bigger picture and think that, going back to what I said earlier, that people are thinking about different ways, different things to invest. And, if the Southwest is showing, increase in yields on rental properties, if it's showing house price growth of maybe double digits for the residential or the buy-to-let market, why wouldn't you want to invest there?
No, that's great. And it's good to know. I mean, obviously, Richard, you touched on earlier that there are many, many funders, lenders and options within the bridging and short-term lending market. So I suppose a good question, whilst we've got the sales director on the podcast, is why should people use Masthaven? What sets you apart from other funders?
Well, Masthaven, I think that our biggest selling point, our USP, if you will, is that whilst we are a bank, and we've been a bank for 4.5 years now, is we started off as purely a bridging finance lender. As you said, I started in 2008. I started in a very small service office in Lombard Street in London with the founder, Andrew Bloom, and 2 other members of staff. We now are, we number over 200 members of staff in the offices in Covent Garden. And with regards to bridging finance, which is what we're talking about at the moment, I think if you've become a bank from a bridging finance provider, you know what works, you know what brokers want. And generally speaking, yes, brokers want cheap pricing. Of course they do. They want to win the deal. But the majority of brokers and introducers to us say they want surety of funds, surety of the deal. You've got a client that you're sitting in their living room, front room, or over Zoom now, as the case may be, and you've said to them, I can help you, Mr. and Mrs. Customer, whether it be on a residential purchase, a buy-to-let purchase, a commercial building purchase, or whatever it may be, I can help you. You want surety of decision, surety of funds from your lender of choice, which in this case would be Masthaven, to go back to your clients to say, these lenders are going to give you your money. This is what we've got to do to get it. And I think, notwithstanding that other banks, don't sort of know, too much about bridging finance, that's not what I'm saying at all. I'm just saying that our ethos and our, we're ingrained in bridging finance. It's what we've done for ages. And yes, I have been there for quite some time, so I can talk about the old stories of how it used to work and how it goes. But in all those years, you build up relationships. And I think relationships are so important in all forms of business, but specifically bridging finance, because you want to sort of shake hands, either whether it be in face-to-face or over a Zoom call, that yes, we'll do this deal subject to everything going accordingly. and it's having that confidence in the lender that you can go back to your clients and say, yes, Masthaven will help you with this transaction.
Great, thanks. Now, we said before that the last 12 months have been difficult and challenging for everybody. I think it's probably one of the most used expressions behind pandemic and exponential and everything else that we've had thrown at us in the last 12 months. But I think what everybody that listens to this podcast will be keen to know is, what's your advice to property investors and development specialists as we go through the next year in relation to funding? What's the advice direct from a bank?
I mean, the first thing, obviously, I need to say is I'm not qualified to give advice, but if you ask me just for advice as a director who sees many